The final part of Lecture Series 23 of Bite-Sized Corporate Reporting on IFRS 2 Share-Based Payment focuses on cash-settled share-based payment. So, how do we account for a cash-settled share-based payment transaction? For a cash-settled share-based payment transaction, an entity shall measure the goods or services received by recognizing either an expense or an asset with a corresponding increase in liabilities. At each reporting date, the fair value of the liability shall be remeasured. For cash-settled share-based payments where services are received, expense shall be recognized over the period the services are rendered, the vesting period. An example of cash-settled share-based payment is share appreciation rights, where employees are entitled to future cash payments based on an increase in the entity's share price from a specified level over a specified period. The liability attributable to the share appreciation rights shall be remeasured at each reporting date based on the current available information of employees who have left, expected to leave, and the fair value of the share appreciation rights to ensure this is the best estimate of the liability at the reporting date. The fair value of each share appreciation right comprises the intrinsic value together with its time value. The fair value of the share appreciation rights may exceed the intrinsic value at exercise date, as the share appreciation rights may be exercised over a period, and the fair value of the rights yet to be exercised have the ability to benefit from future share price rises. In such cases, at the end of the exercise period, the intrinsic value of the share appreciation rights will equal its fair value. The liability will be cleared with any balances recognized in the profit or loss. IFRS 2 stipulates an entity shall disclose information that enables users of financial statements to understand the nature and extent of share-based payment arrangements that existed during the period. The main disclosures are: 1. Description of share-based arrangement. This should include disclosures that enable users to understand how fair value have been determined. 2. The number of share options granted and/or exercised during the period. 3. The total share-based payment expense. With this, we have come to the end of Lecture Series 23 on IFRS 2 share-based payment, covering the following. 1. Objective and scope of IFRS 2, including the definition of equity-settled and cash-settled share-based payment. 2. The recognition and measurement principles of equity-settled and cash-settled share-based payment as set out in IFRS 2. 3. How to account for share appreciation rights. And finally, disclosures. The next bite-sized corporate reporting lecture series will focus on IAS 12 income taxes.